because a stock is cheap, it doesn't mean it's a better buy than something that's more expensive. I see this all the time when people ask me and they say, hey, such and such a stock just dropped below $1. Why wouldn't you buy that? My question to them is, why would you buy that? You need to look at the overall trend, not just the price. Keep in mind, guys, price and value, price and company size, price and company success have no correlation whatsoever. You need to look at what that company is doing to deserve that price. So if you're looking at a company that's valued at 69 cents a share, right, and that company for the last year has been just losing value and creating lower low after lower low after lower low after lower low, you can look at that one of two ways. One, you can say, wow, it's got all this room to climb back up. Or two, you can be smart and you can say, look at this active downtrend. I am staying away from that. All right. On the other hand, you have a stock that's valued at, call it $32.12, right? You could say, well, that's 50 times higher than this 69 cent stock. Why would I ever buy something that's 59 cents higher, right? The other way to look at it is, well, this stock is adhering to support and resistance. This thing is tradable, right? You can buy support, you can sell resistance. It's fairly easy to, determine that price action based on the charting patterns. That's what we need to be looking at instead of what is this thing priced? Unsuccessful traders and investors will think, what's my potential return? If this thing goes to $1, what do I make? And they'll see that opportunity and ignore the fact that this is a downtrend. Successful investors, successful traders think, what's my chance of a return? What are the chances that this thing is actually readable, actually tradable, actually something where I'll be able to put my money in and see a return? That's the difference here.